BharatPe is a FinTech company that caters to small merchants and Kirana store owners in India. The company offers a range of FinTech products including interoperable QR code for UPI payments, small business financing, Bharat Swipes, the POS machine for card acceptance. It also offers merchant loans besides a peer-to-peer lending product called 12% Club. The Upstart, which recently received a banking license from RBI in October last year, is pretty set on becoming a digital bank. In the latest dispatch of Meet the Unicorn, we speak with the CEO Suhail to understand more about the journey till now and what next for the company. Let's start the conversation by asking you uh, the course of the pandemic really a very super abnormal growth in the wake of massive digitization. If you were to tell me what really has been the watershed moment for Bharat
Yeah,
Pay as an enterprise, what would that
yeah.
really be?
No, I think it's tough to put it down to one thing, but I think the real watershed moment was demonetization, actually, not COVID, right? And that pushed a lot of business towards digital. That sort of sucked out a lot of the cash transactions from the system, and that's where sort of UPI really started growing. I think COVID obviously has made the initial momentum sort of not only sustain but grow leaps and bounds, right? And we were very worried when COVID one struck, right? And transactions, because especially for us, right, we were only offline and we're still only offline. Transactions for the first 2 months came to a stall, right? All the shops, etc., were closed. I think one thing which was very evident, and that's around the time I was joining, and I was very clear that's the shift we will see, is during COVID, everyone sort of started using digital a lot more, right? Even my parents, who had never sort of used even a credit card in their life, started paying everything digitally, started using UPI, and were all downloading sort of UPI apps. And it was very clear that as sort of shops will open up, the first thing which will change is consumer behavior. Because like they want to go digital, and UPI from that point of view is actually the most touchless way of doing a transaction, right? In a credit card transaction, you still have to tap on the machine, or you give your card to the guy who has to feed it into the machine, then you have to put a pin, etc., etc. But in UPI, you're actually only touching your phone, right? So that was always going to be the use case which would sort of rise the most, right? And as more and more consumers started paying through UPI, and more consumers starting demanding UPI, the merchant
Mm-hmm.
ecosystem will sort of obviously keep pace, right? Because they don't want to lose business, they want to grow. And if UPI is what consumers will prefer, merchants will accept UPI, right? And our business sort of, which was always growing fast, in the last 18 months has sort of seen unprecedented growth, right? We were doing around $2 billion of transactions a year when wave one hit. Today we do around $17 billion of transactions a year, right? So the business has sort of gone 8.5x. A lot of it, of course, some of it good work by our team, but a lot of it is just the consumer shift of moving digital and going towards UPI.
So there's definitely a structural shift, the way
Yeah,
consumers lap digitization. So if I were
yeah.
to ask you, Suhail, and a very sort of candid revelation here, what would you owe this super abnormal 8x growth to be? I mean, what can fundamentally change an organization, I wonder, to grow for 8x in 1 year? It has to be something very seismic, right? I mean, we all have,
Yeah.
I mean, I have been covering startup markets or private markets for sort of a while now, and this is super abnormal. I mean, one doesn't really see this. Like you said, it's unprecedented. So, how much of this success would you owe to a very COVID-19 induced growth? And what sort of really goes to say that Bharat Pay is sustainable or you are anti fragile in that way?
Absolutely, and I think it's a great question. By the way, I fundamentally believe no business can be built when it is facing headwinds. It's very tough to build a business on headwinds. All large disruptions come on the back of a tailwind, right? And they come on the back of a massive disruption like COVID. I think COVID gave us the opportunity. Digital payments and UPI sort of has grown 4x in the last 18 months. What has enabled us to grow 8x is obviously the market, but what has also enabled us to grow 8x is sort of our focus on tech and product. to be scalable, right? It's very easy for you to say market was great and therefore you grew, but having the systems in place which enable you to not falter when you have a monthly doubling of transactions is much easier said than done, right? So I think we've always prided ourselves on our tech capabilities, and we've always prided ourselves on being running this in a very, very thoughtful way, right? Our tech team, even today, is 80 people. If you compare it to some of the other payment companies or tech companies, probably 1/5, 1/10, sometimes even 1/20th the size. I think that 80 people team sort of being able to handle a 8x growth in business without faltering day in, day out is sort of a real reason why we are where we are, right? So,
But Suhail, I would like to sort of disagree with you here. You said that it's easy for me to ask you that the market is growing, so all of you are growing, but that really is the reality.
no,
You are
absolutely.
growing. Razor
Absolutely.
Pay is growing, Cash Free is growing, Pine Labs is growing, everybody is growing here. And from a distance, let me tell you, all of
Yeah,
you look the same because the language, the narrative is the same. Shrija, our
absolutely.
tech is great, our product is great. We have invested in consumer experience, and all of you are
Yeah.
venture funded. So, what really is the moat here? So, for us to say all of you are growing on back of COVID-19 induced growth might not be an overstatement. I might think so.
No, absolutely not. It is like, again, let me rephrase this, right? So, COVID-19 was the disruption which gave all of us the opportunity to grow, right? Zero sort of disconnect with that. Not everyone has been able to catch hold of that opportunity, right? For for like a 8x growth we've seen, there are also other companies, including in the list you articulated, which have grown 2x, which have grown 3x. There are also companies which have sort of fallen by the wayside because their tech and product was not able to ramp up according to the market growth, right? So, like the market has grown only 4x, right? We've grown 8.5x. There must be someone's share we are taking who's sort of not been able to catch up with this growth, right? Again, I will not get into specific players. These are all great companies. But not everyone has been to scale as seamlessly as we have been able to. And to me, to be able to do that with sort of a small tech team is actually both a strength as well as sort of makes our life sort of much simpler, because it doesn't mean if you have to grow another 8x from here, we need to like now build a 1,000 people tech team as some of the other fintech players do have, right? So I think our ability to sort of keep the tech going while the market disruption was happening is sort of one reason why we've sort of pulled away from the pack a bit. The second reason we pulled away from the pack is we are very, very focused on product. Tell me one company in your sort of lovely list which has been able to sort of launch as many products in the last 18 months, right? So we launched merchant loans, we launched merchant credit cards or credit on cards, as we talked about. We launched a POS business, we launched consumer credit recently, we launched an investment product in 12% club, and these are like sort of the some of the large products. I'm not even talking about usual engagement type products which we've launched. There are not many companies which can sort of say that in the middle of COVID, while there was unprecedented growth on the transaction side, they've been able to sort of launch 5 clutter-breaking products into the market at the same time, right? So that's sort of the strength of the business, the ability to continuously launch great products while you are massively crunched on capacity on the tech side to keep up with just the growing transactions, right? And I think that's what we really pride ourselves on. Of course, in India, no product is sacrosanct. Every product can be copied. So today we are ahead doesn't mean we'll be ahead tomorrow, right? So I think the real test is, can we continue to hold this momentum on product and tech while we do the next 3 years of the business, right? Because you can always argue it's easier at a smaller scale and tougher at a larger scale to continue to innovate. But that's sort of something we pride ourselves on, and hopefully we'll continue to keep that going.
So let's talk about the specifics, specifically about BharatPe, and some numbers definitely have come out. And let me tell you that this is not new to me. And we have seen this coming in, especially private markets. I mean, spending about 230 crore rupees to generate a revenue of 6 crores.
Yeah.
I have seen this. I have seen this movie play out and very well. And
Yeah.
you have been with McKinsey, and you were made partner also there before you ventured out. Uh,
Yeah.
E-commerce was really that, and we definitely had so many of these conversations that can you really burn your way to startup success? And
Yeah.
looks like that question should be dropped now because this seems to be the new normal. So
Yeah.
should so let me ask you this question straight up, that should VCs and people like us even be asking you these questions anymore? Should frugality be a virtue appreciated by startups anymore? What really do you think about that?
It's an interesting question because I think at one level, some cost or some burn is expected if you want to grow at the pace we've been able to manage and some others have been able to manage, right? So you can always take the route of let me grow slow and steady and let me grow at the rate where my operating revenue can sustain my growth. That's a very legitimate choice of building a business, but that is not a VC capital backed business. That's like the Zerodha story, and I love that story, right? And um, the guy said we are going to make money from day one. Whatever investment is required, we will fund it. We don't want VCs on the cap table. But
That's a
that's
very
how
dangerous statement coming from an ex McKinsey guy. I love the zero that
no,
story.
I love it. And it's a brilliant story, and there are many others which are probably not as famous, but that's a legitimate choice, right? And uh, but that's a operating model choice on you want to raise external capital or not. Once you've gone down the path of I will raise external capital, and I don't mind diluting my ownership in the business, then it is about how quickly can I capture bulk of the market, right? And I love how sort of financial numbers tell part of the story because obviously we will have a 230 crore loss if the first year was only network built, right? We had not even started monetization. I don't know where the 6 crore also came from. It must be a computing error. We should have been zero because the first year was all about network build out. Uh, and this is the story which is we've seen multiple times, right? Nika first year, I'm sure if you look at numbers, they will tell a very, very similar story, maybe not as stark. I think for us, the question is once you have the network in place, the first 230 crore was really spent in building version one of the network to get to 2 million, 3 million merchants where we can start doing monetization. I think this year's numbers will tell you a very different story. Cost would have obviously gone up, but not drastically. Operating revenue would have gone up multifold, and the next year will tell you a very very different story, right? And I think investment comes first in the way we think about it, right? Like even think of I think you were taking a very let me take the old world example, right? Maybe not VC
Mm-hmm.
example. If you were to set up a power plant, and sorry I'm going to power because I used to lead clean
Yeah.
tech for me, uh, before you do any revenue you are incurring for a gigawatt of capacity roughly 8,000 crores before revenue, right? You can argue it's capex, but what is that capex worth if it
I
will
think
not
that's
translate?
capex loss. That's what I was trying to say. This is
So,
capex.
so similarly, you should think about distribution build-up as a capex, right? You think about a FMCG startup even in the old world. They had to build distribution, right? They had to get enough distributors, they had to get to enough retailers, they had to give schemes for driving sales. In a typical FMCG startup, the distribution cost in the first year is around 150% of sales. Just the distribution cost. I'm not even gone into the product cost, everything else, right? So there is cost of building distribution. Now, just the way how audit and sort of audit norms work, capex is amortized, whereas sort of distribution buildup is expensed, right? So, but to me, that's the capex or that's the acquisition cost of a retailer I have to
No,
bear
it's a
before
fair
I can.
point. So one gets the point that you're a VC built VC built sort of business. You're VC backed, and that the decision been taken from day one. You have raised external capital, and ultimately this is a burn which is sanctioned by the VCs. So it's a
Yeah,
very, very well thought out boardroom strategy that we will throw money at people to get them to use our product. And we have seen the story play out. In e-commerce, we have seen this very ugly slugfest between Snapdeal and Flipkart. And that brings me to the question that when you are throwing money for customer acquisition, and that can vary for an e-commerce company to a fintech company, ultimately all of you are building a very large consumer business. What
Yeah.
happens to the loyalty of the customer?
Yeah.
We saw this in the e-commerce. As long as the discounts were running and the one who had the better discounts, the customers flocked to that. The customer loyalty is a very fickle thing in this
Yeah.
special digitization world. So how do
Yeah.
you solve for some of these things then?
I think again, by the way, I'm not a big believer in the e-commerce story, so you're probably asking the wrong person. But I think you have to think about it on what does it take me to acquire a consumer. In my case, it's a merchant, but eventually he's my customer, so I'm like sort of going with that flow. What does it cost you to acquire the merchant? And what does your first sale to him translate in terms of how much of the customer acquisition cost do you cover? Right? The problem with e-commerce always has been that the average order value is so low and the gross margin profile is so low that when you actually make a first full price sale also, you don't recover your CAC. You are dependent on the guy coming back onto the platform multiple times over, which is obviously ideal for all businesses, but it's easier said than done, right? Especially in a when the product differentiation is very low, right? Because a shampoo is a shampoo, right? So it's not going to change whether you buy it from Amazon or whether you buy it from Flipkart, right? And therefore, what is critical in sort of making a e-commerce business work is either very high repeat, which you will not know at the time of acquisition, or a very high first average order value. So that the CAC gets covered in the first order itself, then you're not worried, right? And that's why I love Nika model, because a Nika card typically is 2,000, $2,500 at a 40% gross margin, 1,000 rupees come in, your CAC is not more than that, right? So, and therefore I will believe Nika is sustainable. I'm not convinced that Flipkart, Amazon on a standalone basis are sustainable. They will obviously have incredible set of other products once cross-sold, like in Amazon's case, AWS, in Flipkart's case, lending or something else, which will make the business work. And they can theoretically treat the full e-commerce business as CAC, right? So, and sort of start making money from elsewhere. I think in our case, what is interesting is that we are we are in products which are not necessarily as standard, right? It's not, you're not buying a shampoo. Payments is buying a shampoo. Whether you use my QR code or whether you use PhonePe QR code or use a Paytm QR code, a QR code is a QR code is a QR code, right? So it's a shampoo. You use anyone's. But what we do on top of that is very, very different. And therefore, a consumer who comes to BharatPe because I can enable an investment for him where he earns up to 12%, or I
Hmm.
can offer him a loan at 2% per month, is not a product a PhonePe, for example, will offer him.
And replicate. So it's not
And
easy replicable.
it's not an easily replicable product. So therefore, the stickiness of my consumer or my merchant on the platform is decided the day he decides to join my platform. It doesn't mean that there will not be initial churn, but once you've gone through the first 2 3 months journey and you're comfortable with the payment architecture working seamlessly, and as soon as you take your first product, which is a bought product like a loan, then you are on my platform, right? And I think that's sort of one thing which is difference, that the products are not so easy to replicate. The second thing which is difference is typically on my first sale to you, like a loan, for example, I make not only your acquisition cost, but I cover the acquisition cost of 4 other merchants. uh, Therefore, that allows me to sort of be a bit more comfortable acquiring merchants, because I know, like, even if they have a bad experience, and obviously that's not the intention, every business wants to do great merchant experience. But even
Hmm.
if there is a bad experience, but I have sort of managed to sort of acquire you once and sell you one thing, I, as a business, am sort of covered for the CAC at least, right? Not ideal state at all, so don't treat it as that way. And we sort of track merchant and consumer experience at sort of gory level of depth. But But to me, the first sale is when I start becoming profitable already,
So
and
Suhail,
that's
so let
enough
me
in the
ask
business
you
to
that.
scale.
So I understood that. So let me ask you a flip question. So is there a handle on the cash burn? I mean, now the fact, so I ask you this, that now the liquidity gates have seemed to be open. There's a floodgate of capital coming India's way. It's a benign liquidity environment, and rightly so, because we seem to be the growth economy on a very right track. So in terms of your marketing expenditure, customer acquisition cost expenditure, is there an intention to lower it down ever, or you want to sort of pump in more capital out there?
No, we are actually massively efficient on merchant acquisition cost, right? So a merchant acquisition costs me $3. Tell me one company who can sort of do merchant acquisition at less than $3. I will say I have to cut my costs. Uh, the question is how till how long will we keep on acquiring merchants, and at what
Hmm.
stage we will say we've got to a massive base already. It is now more useful not to go after incremental acquisition, but just to focus on monetization of this base, right? So, and we are, I think, still a couple of years away from that, because today on my platform, I have around 10 million merchants. Uh, 3.5 million of them very, very active, right? Guys who I can really cross sell to. Uh,
Okay.
India is a land of, like people will argue, 100 million merchants, but at least 25 million probably relevant to me. So I am only probably 20%, 30% of my way through on the merchant acquisition side, right? So I will keep on investing on merchant acquisition. What will happen over a period of time as my monetization ramps up? And my monetization is profitable monetization. It is not like a 10% gross margin in which the cost of delivery is 20%, and I'm actually losing money even on my sort of monetization. It will increase the sort of the EBITDA contribution coming out of that, and therefore losses will keep coming down. At some stage where monetization ramps up enough or customer acquisition sort of starts tapering down, the business makes structural money, right? So, and I think, and therefore, I think to your original question, when do sort of businesses, what is sort of the marker? Should VCs be asking this question at all? I think how much are you burning is a fair question, but what is even fairer question is, um, what is the gross margin on your monetization you're going to make, and how deep can monetization run in what you acquire, right? So because theoretically, if I can sell an investment product or a loan product to 30% of my base, my investor should tell me, why are you ramping up only at like 1 to 2 million merchants a year? Why are you not ramping up to 50 million merchants in the next 1 year, and then just sit tight and invest like 50 million into $3, invest $200 million in the next year, and then no investment required, then just monetize, right? So it can't be looked at in isolation. I think it's about
Hmm.
what does it take you to acquire, and how much money can you make from that base in a already proven test case, right? Because if I'm at this stage of valuation and I'm not still validated whether money will be made, that's a big problem, right? So,
So you
but
are
in our
saying money will be made, but it's basically 1 year away when you have achieved that critical mass. You said 25% of market, 25 million is perhaps a number you want to get at before you sort of start the funnel of monetization.
No, so we've started the funnel of monetization. So I think, and we don't have to wait to 25 million merchants to turn profitable. At some stage of monetization, which is X number of people on a loan or an investment product, as compared to the total base, the business turns profitable, right? So in our sense, obviously COVID wave 3 notwithstanding, we can get to that number in 12 to 15 months from now,
Wow.
and sort of turn the core business profitable. And to be honest, we are not rushing to turn it profitable, because
Hmm.
theoretically I can turn the business profitable today. I stop
Yeah.
merchant acquisition, I am profitable, right?
It's
So
about the
therefore,
ambition. It's about the ambition, how big you want
it's
to
about
be.
the ambition on how big you want to be, right? It's sort of a thoughtful compromise between profitability and growth, right? So, but it is thoughtful. Thoughtful is important. I, I at no stage, like the way to look at it, at least from our business point of view, we've cumulatively spent around $120 million so far, right? tell me a comparable where someone has only spent $120 million and they are sort of doing a payment volume of $20 billion a year, and they have 10 million sort of merchants on the platform, and are running sort of monetization at $150 million annualized revenue a year, right? So we've, like, it's slightly unfair to say we've not been frugal. I think it's a conscious call to lose money to build the merchant network.
I think let's settle at the fact that its frugality is relative. What is frugal to you perhaps is not frugal to me. I think it's a relative
Absolutely.
term, varies from
Yeah.
company to company and different contexts. And I think I like what you just said right now, that as an organization and somebody who has burned $120 million, and if we don't have a handle on when we become profitable, perhaps we are groping in the dark, and you clearly are not. Uh, Let me ask you this entire thing of what you sort of mentioned, that Shrija, I like the Zerodha story. You yourself seem to have ventured into the peer-to-peer lending space, and this 12% club is an interesting idea. Let me first tell you that. At a time when the financial literacy in this country is so low, you take away the headache from people saying, "Dude, just give me the money. All the headache is mine," and you take 12% from me at the end of it. Uh, what really sort of propelled you to get there, and are you becoming a wealth tech company then? So what really is the ambition for BharatPe? uh, you seem to be in neo banking as a foray, then there's wealth tech, of course payments is something which you seem to be knowing at back of your hand. So of course the ambition seems to be much larger than what is made out to be right now.
No, the ambition is sort of now out in
Out
the
in
press.
the open.
Out in the press. I think the intent has always been to be the sort of one of the best lenders in the country, and you become a best lender by having obviously good quality loans, and giving ideally loans to people who don't get loans otherwise, right? Because I don't want to compete with HDFC or ICICI on giving 6% interest rate loans to the guy. Everyone has a loan offer, right? I get 5 loan offers a day. I'm the guy who needs loans the least, right? So there is no point in sort of everyone offering loans to the same set of guys, right? India has not moved beyond 3 million cards, 3 crore cards, or 3 crore people with cards. There is 127 crore people waiting for a card. No one is giving them a card, right? So I think this is about building a really large lending business on the back of people everyone has ignored, but there is obviously massive potential in monetizing those folks as well.
Okay.
And if you have to become a large lender, you need capital to lend. All right.
Mhm.
So, and
That becomes your raw material. Capital is
that
your raw
becomes the
material.
raw material, right? And you can't keep on lending on the back of equity money,
Yeah.
because then you can only become as big as money you raise as equity, right? So therefore, generating your own liabilities is important. Uh, the intent from beginning was to become a bank, and that's why we sort of even went after the banking license and bid for PMC. Whatever we were doing in the interim were sort of mini steps to get to there. The reason we did payments, and we did payments for free, was because we believed if you have to underwrite these guys, no one can conventionally underwrite on the back of their annual filings, etc. Then you have to be in the cash flow, right? You have to
Worked
see.
out for you. The strategy worked out for you clearly.
Yeah, the strategy worked out for us. It worked out on payments becoming a source of lending. Lending started working out, and as lending started sort of gaining ground, we needed liability to fund that loans, right? So, and therefore the product like a 12% club, where basically when I acquire a merchant, right, it's very difficult for me to know whether he needs capital or he's surplus capital.
Hmm.
I solved both my loan side or the asset side as well as the liability side problem in one go, right? Because if you're a cash starved merchant, I can, along with my NBFC partners, enable lending to you. If you're a cash surplus merchant, I, along with sort of my NBFC partners, can enable an investment product for you. So effectively it becomes merchant A lending to merchant B through my NBFC partners, and the system becomes sort of sustainable on its own without the need of sort of external capital, right? So that's what we built, and that's what a bank really is, right? Bank is, you are a consumer who has excess capital, give it to me. There is a consumer who needs a loan, I will give it to him, right? So So we sort of, through a combination of our NBFC partners on the asset as the liability side, tried to replicate that. And
Hmm.
now given we have sort of the banking license, I think it does a lot of things in terms of sort of reducing our cost of capital, etc., so that we can sort of widen the base where we lend. But I think the intention from the beginning was to translate into a bank. We had always thought it will take 8 to 10 years. I think we've been sort of incredibly lucky that that we've got there in like 3.5 to 4 years. But now the onus is on us to make this bank work.
Also lucky, and also you must thank the bad quality assets of traditional banks. They were so bad that you could just go out and buy one of them. uh, I also wanted to ask you, you mentioned sort of a very profound statement that you made here, that Shrija, I don't want to compete with an HDFC. I'm not in the game of providing sort of low interest rates, and everybody has the 6 or 7 offers, the loan offers. So this entire chatter about neo banking and digital banking, and I sort of and I must tell you this, that I went for a fellowship in London, and the entire world is watching UPI, and it's a cynosure of all eyes. We are so revered with what we've done with UPI, and we were sort of talking about what Revolut has done, what Monzo has done. We spoke with those founders, part of the fellowship, and all, very intrigued by how they built this entire neo banking concept and back of socialization of financial services, if you will.
Yeah.
And of course, India has a much larger consumer base, and you already have a much larger consumer base with what you set out to be. So when you say I don't want to be a bank like an HDFC and all, so are you saying that it will be an enhanced and digital consumer experience like a neo bank, but not necessarily with the headache and legacy system traditional bank? You don't want to get the headache. So what kind of bank do you really want to be? Can you
So I
clarify that?
Yeah, no, absolutely. I think it will be a predominantly digital bank, right? So I
Like a
don't think,
DBS in Singapore, like DBS.
yeah, maybe DBS. DBS is actually not a bad example. Monzo is not a bad example of what they are sort of
Hmm.
building. It will be a predominantly digital bank. I think, why do people want to go to a bank, right? Basically, transaction is what they want to do, right? Bank Going to a bank is by and large a headache unless you have sort of lots of time to kill and you want to interact with someone at the branch. Most people want to do banking; they don't want to visit the bank, right? So, and that's sort of the experience we want to do, right? We want to build a seamless digital product, a digital first bank. If you look at most of it, I'm not taking potholes at anyone, but if you look at today's most of the digital apps even a bank has, it's basically, we have branch banking operation in the store, or in the bank branch, that got translated into website, and that website got translated into an app, right? That's not how apps are supposed to be, right? Like
So
I
let me ask you, so what is it that the digital branch of someone like Uday Kotak is missing, which BharatPe is solving for? Ultimately, there's so many years of experience and history that has gone behind understanding that consumer and building such a large banking system, which
Yeah,
perhaps an upstart can solve for. What really
yeah.
are we missing here?
I'll tell you what we are missing. We are missing the digital DNA. When you have such a massive setup, then you try to replicate that setup on an app. That's what most of the large banks are basically doing. They're saying our banking is working seamlessly and it's working fine. Let me just give the customer an option of doing the same thing on the app. That's not what digital banking is. What you do and what you do on an app, what do you want your bank to do, really, right? You want to do a transaction,
Mm-hmm.
send money to someone, you want to do commerce, you want to apply for a loan, you want to do an investment. Like, literally, I don't understand why any banking app should have more than 4 tabs. Like like I genuinely don't get it, right? And like, I will not sort of name pick, but I'm very tempted to. But most of the apps of current incumbent banks don't provide for that. They are copy paste of the branch banking process on a phone. Uh, that's not that's not what a consumer wants. I want to do a 50 rupee transaction. will you open up your banking app ever to do a 50 rupee transaction? I promise you, like, you don't have to answer that question. Like, no one will. If anyone is like, sorry, he needs to get on a fintech app. But you want to do a 50 rupee, like, why has UPI become big at PhonePe, Paytm, Google Pay? It's eventually the money is actually going from the same bank account, which is at the back end. Why couldn't have banks given that experience? Because it's just so clunky. And like, so I think you need a digital first DNA to be able to do this. Will one of the large banks basically say, leave the legacy on the side, we are building this de novo? Maybe, maybe not. Can they do it? Maybe, maybe not. Has anyone done it? No. And it's been like 50 years, like banking has sort of continued to struggle in the same way, right? And UPI has been now around for a while. If the banks had to get it right, they should have got it right? So I don't think it's the bank DNA. The second thing I think, which is what we are missing in the argument, is a bank is still not able to lend to more than sort of 15 crore people in the country. Only 3 crore people on a credit card, 15 crore overall. Why are the remaining 115 crore people don't have access to credit? Because the conventional underwriting model which banks have, which are so paper dependent, which are sort of income tax filing dependent, which are sort of, I don't know, GST returns filing dependent, uh, and the collection systems they have are just not suited to give loans to vast majority of people. Like, I was once doing this maths, and I may be wrong. If a bank gives a 50K loan, 50,000 rupees Indian rupees loan, no matter how easy is it to give that loan or collect that loan, bank always loses money, because the cost of underwriting, dispersal, and collection is a fixed rupees. It's not a percentage of loan. And therefore, like, try and take a loan of 50,000 from your bank, you will not get it. Try and take a 5 lakh rupee loan from a bank, you will get it. Like, that's not really solving for anything. And as soon as you say 50,000 loan is where I lose money, 5 lakh loan is where I make money, it basically leaves the 115 crore people out of the credit basket. Right? Banks were created with the view of making financial inclusion happen.
Hmm.
Uh,
Hmm. But it's clearly not doing that. They
it's
got into
not
the
doing
business
it
of maximizing profits.
because,
Yeah.
and I don't blame them. Their systems are not designed and in a way that they can. And I, like, it will take a great SBI to basically say, I will be the messiah of the world and give loans to everyone who asks for it, whether I lose money or not. Not a lot of private banks will be able to do it, and that's where sort of a tech-based sort
Approach.
of player comes to. Like, I am in the payment flow of all my merchants, right?
Hmm.
Needs a 10K loan, I can give him a 10K loan. I know his servicing ability on the back of the transactions. No bank has that. Now, will a bank will a bank go and compete and place QR codes versus BharatPe? Maybe, most likely not, because you have
Suhail,
a.
I have a point of view here, and that point of view is one with the fact that perhaps that is what makes the Indian banking so strong and resilient. I mean, we did not have a subprime crisis in India because our consumer lending part was perhaps not that frivolous. We had robust systems in places in terms of we were very, very particular on
Yeah.
how we deal with this institution like the RBI. Do you think that with so much capital being there and the advent of so many neo banks or digital banks and upstarts who are perhaps in the hurry to get to that and be so be so quick and big so fast, perhaps the lending could be something which we can be distorted and perhaps we might burn some fingers there. Don't you think so? That can really happen.
Yes, I absolutely agree. Right, I have no disconnect with what you are saying. I think I will make 2 points. Right, so one is, uh, until you try, you don't know. Like, you can't say, "Oh, I may burn some fingers, so let me not go anywhere close to the fire." Right, so that doesn't expand the market. Market expands by thoughtful sort of actions on increasing the size of the pie. You do small experiments, you see them working, you scale them. You don't see them working, you kill them. Uh, and sort of that's what I think fintechs are geared towards doing, because the ability for us to see data is like, think of a bank loan, right? So when do you get a sense that the bank loan may turn south? The earliest you get a sense of a bank loan may get turned south is probably 45 days after you've given the loan.
Yes,
Right?
yes.
30 days, so nothing is due. Then you're saying, oh, maybe 5 days late chal raha hai. Then you like do 4 calls, and then you realize the guy is not even traceable. In our business, you get a sense that the guy is potentially going to default on day two, because it's an everyday installment product. He's missed his first installment, he's missed his second, then your all red flags go up. A system like this is always more suited to experiment and course correct versus a conventional system, right? So there are inherent advantages on why fintechs can able to experiment better than what a bank can. Having
Hmm.
said that, it the extreme end of that is the risk you articulated, and I actually think that fintechs in India will get regulated by RBI. RBI has been sort of thoughtful about letting experiments happen, but when those experiments become systematic, you have to find a way of keeping them within the guardrails, right? And therefore, sort of the RBI draft paper on digital lending, etc. It may have short-term heartache
Repercussions.
for
Yeah. Yeah.
short-term heartache for some of the fintech companies, but I think fundamentally, long-term point of view, it's a good thing to do, because I believe sort of all fintechs do need to sort of work not necessarily in the same guardrails as a bank, but not also like sort of without supervision and control.
So how far is the IPO then?
Mm, it's a good question. I think we don't know. Uh,
You
I
don't
think
know. You seem to
see,
be the guard about everything,
IPO is a function of two things, right? Your business being ready to IPO and the markets being right for an IPO.
which
Uh,
I think clearly is right now.
right now, but we are not ready. I don't want to do a small IPO.
You think
Uh,
Paytm? You think the Paytm IPO spoiled the game for a lot of fintech, and that really was a time when the bubble really burst? One could say that.
No, not really. I think Paytm IPO spoiled the game for Paytm and no one else. And for businesses who don't have a business and they call themselves business. Paytm IPO
So
was
I must say this, Suhail, that you really come across being someone for him BharatPe is really the best thing that happened to the entire fintech universe in India.
no, I don't think so. I think we
Yeah.
are great,
But
and so are the people.
all your answers are like that. That,
No,
you
like
know,
to be honest, like again,
yeah.
everyone gets things wrong, and in Paytm's articulation, again, this is nothing against Paytm as a company. It's a great business. They taught India UPI, so I have massive respect for what they've achieved. But I think one place where they went wrong was they believed you can make money on payments.
The size of the ambition was perhaps too large, I would say.
No, I think the ambition is fine, and I do believe fundamentally Paytm will emerge as one of the winners in the fintech universe eventually, if it is already not a winner. But I think their core premise was we will make money on payments. They realized it too late that money can't be made on payments. Probably realized it only 12 months back when they started scaling the lending business. Uh, Now, unfortunately, the timing of the IPO was such that the lending business was still subscale. If
Yeah.
your only monetization is subscale, uh, then you can't pull off a $20 billion IPO. If Paytm had done a 5 billion IPO, all of us would have been over the top on what a successful IPO it is, right? Because Paytm is valued 13 billion today, right? Give the guy some credit that he's built a $13 billion IPO, right? Like we are holding him to gun, saying 20 billion ka IPO, 30% drop, right? Like it's eventually still a $13 billion company, right? So it's not a failure by any stretch. I think you can always argue that maybe the IPO should have been 1 or 2 years down the line when the lending business was a bit more scaled. Or maybe the IPO should have been two
I
years
think the
earlier.
questioning starts. I think the questioning starts coming in when you are dealing with retail money, the retail investors' money. As long as you are privately owned, you have VC money to play with. These questions and scrutiny will not be there, and that perhaps is the question. And perhaps learning for a lot of VC-backed companies that how ready they are for the scrutiny when the public listing happens.
No,
We're already
absolutely.
seeing in the case of Zomato IPO. Yeah.
Absolutely. Absolutely. But I would put that onus not necessarily on Vijay. but I will
Yeah,
put that onus on the VCs which funded it and forced it to go public. And I will put the onus on actually the merchant bankers who said you can pull off a $20 billion IPO.
true, true.
Uh, Vijay, if he's hearing from everyone that you can pull off a $20 billion IPO, and if his last investment is at $16 billion, and VC investors are saying no, nothing below 16. Again, to be honest, I'm assuming a lot of things. I don't know what Vijay was thinking,
Yeah.
but there is so much of external pressure and validation uh,
Mm-hmm.
it's easy to get carried away with that, right? So I think you need to sometimes stop, like only listening to your people who surround you, and actually go out to the world and see what is really happening, right? So
That's
I
what I
think
wanted
enough,
to ask you.
like,
That with so much exuberance right now, which is an irrational exuberance, how do you retain sanity? Especially fintech is such a sought after space right now. How do
yeah.
you
So I
retain
think
sanity?
the only way you retain sanity is by focusing on the core business, right? By saying, are my metrics sort of growing? What are the metrics I want to grow, and are they really growing? And what is the business really worth? I think we've always been thoughtful of not raising money at valuations which are sort of more than what we believe the business is worth. Uh, like, it's very easy, and you know how exuberant the market is. It's very easy for you to keep on doing one round after another, one month separated at 2x the last round valuation. Uh, that's one way to build a business, by saying we'll have enough capital that we will not worry about capital for the next 10 years. Uh, the other way to build a business is I will only raise what my business justifies and at valuations which my business justifies, so that I am never putting investor money at risk, right? And by the way, it's a self-serving purpose also, because investors have the first right on capital. You are actually putting your own equity at risk, not investors. All investors have made money at Paytm, maybe except for the last guys who came in at 16 billion. Most likely, they would have also come in earlier rounds, and net they would have also made money. The only person who has anything at stake is actually Vijay himself, right? So I don't want to be too harsh on him, right? He's the only one whose skin is in the game. Everyone else has made money. Um, like Saif has made tons of money, or Elevation now.
They've made a lot of money, yeah.
Every
Intel
investors
Capital
always
is a lot.
investors
Yeah.
always make money unless the company goes bust. And Paytm is not a business which will go bust. Let's be clear on that. In similarly, in our case, we are not a business which will ever go bust. We have inherent
Mm.
strengths in our business model which will enable us to continue. Market valuation is a function of time and sort of sentiment, etc., etc. So the only way we can sort of go wrong is if we raise money at too high a valuation and then can't justify that valuation.
So what
Investors will
keeps you
still make.
awake? So what keeps you awake in the night? What is the biggest challenge that you see as you grow the business? Besides,
It's a very standard answer which you probably heard from 20 founders. I think talent. It's
okay.
tough to keep getting high quality talent. I think
Hmm.
India sort of a high quality talent is rare, and it has so much demand on it that's very difficult to hire and sort of retain them. I think the second thing which sort of keeps us awake, at least, and sometimes it's like existing business, how do we ramp it? But a lot of times it's actually what new.
What?
We are the company which thrives on sort of doing new stuff, right, and launching new products. If we don't launch a new product in a quarter, we get very jittery.
But they have
So
a CEO like you. They have a high demand CEO like you. That's what I said in the high maintenance CEO. So they better
no,
innovate.
I'm not high maintenance
That's like
CEO.
the culture of innovation in BharatPe. Keep innovating
No,
stuff every quarter.
No, actually, I'm not a high maintenance CEO. I don't even consider myself a CEO. CEOs are salaried, right? I'm not salaried.
You
So
can just say that. Or you'll
so
make
for me,
much. You'll make truckloads of money. Don't worry. Suhail, when the IPO
no,
happens.
I think Shrija, to be honest, some founders want to make truckloads of money. Most founders want to build something, because I think we all, at least in our company, we are at a stage as the founding team and me included, that money doesn't motivate us any longer. We have enough to live our life. We've always had enough to, even before we started BharatPe, to live our life. I think what really this is about is building something huge. if I actually make truckloads of money, to be honest, I don't even know what to do with it. It will most likely go back to charity, right? So this is not about money. I think it's very tough to sustain yourself for multiple years of building if it is all about
Hmm.
money, and there is sort of
That
not a
is true.
wider
That
purpose.
is true. So I need to do some bit of quick rapid fire with you, but before I sort of let you go, I need to sort of ask you that the biggest fad that you see right now, and I need to sort of ask you the decentralization of finance and this Web 3.0 and
Yeah.
this entire thing of NFT and cryptocurrency. There seems to be a lot of flack around it because I don't think that it has really gotten the validation from the likes of the most seasoned investors like Warren Buffett or a philosopher like Nassim Nicholas Taleb. But it seems to be getting into the fancy of the tech guys like Nandan Nilekani and the more new age
Yeah.
technorats to speak. So what definitely is your view or the BharatPe's view in this entire advent of decentralization of finance? Do you think it's like a fad or it's here to stay?
So yeah, I think the core technology is fantastic. Blockchain with its multiple uses is outstanding. Decentralized finance with its multiple use cases is outstanding. Uh, I do subscribe to it. I do sort of individually invest in some of the blockchain DeFi companies. Uh, I am not a big believer of the coins. Uh, Cryptocurrency is basically just I will not call it a fad. I think that's sort of trivializing it too much. But I don't believe a coin is worth anything. It's like
Mhm.
see, if you are, what was the biggest use case everyone said of Bitcoin? That it will hold gold reserves, right? It will replace gold as sort of the central currency token and reserves. Why? Because gold is very volatile. Tomorrow, a big mine may be found, and you will have excess supply of gold. Gold prices will go down. All the classical gyan, which a guy who's sort of a Bitcoin supporter will tell you. But Bitcoin by design is supply constrained. You are only mining it on your own. When you have limited supply and infinite demand, it by design leads to inflation, right? How can an inflationary coin be a replacement of gold? Right. So I actually am a big believer in the underlying technology. I do
Okay.
believe some coins will have merit, some may not. But today the market is so frothy that you don't know uh, if a coin was really valued on the use case the underlying technology had. It's a great asset class. It's then like a public listed company. But right
Hmm.
now, coin pricing is driven by just the euphoria around crypto.
No frothy. Yeah.
And therefore, I am not an investor in crypto. Bharate wants to do nothing with crypto till sort of there is
Okay.
a stable regimen out there. But I understand the use cases. Right? Think of decentralized finance and think of sort of foreign currency transactions. Remittance as a use case, right? Remittance costs you like 5-7%. There is tax, then sort of claim that tax in your income tax filing. It's so complicated. Imagine I have to send money from here to US. I just transfer one Bitcoin. I'm done. Right. So, and Bitcoin is just a stupid example, but like stable currency,
Yeah.
let's say. It just makes for example, in this case, remittance so seamless and cost free that there has to be an inherent use case in that, right? So, whether we will focus on the use case and make something useful out of it, or whether we will sort of get enamored by the coins and sort of
Hmm.
do speculative income and losses, that's sort of the call. I think which will emerge over a period of time. But I do believe in the underlying.
What about this entire idea about buy now, pay later? Do you think it's just the credit card concept and some fancy marketing literature that has come back to us?
Yes. But we've launched our buy now pay
I
later
love
slightly differently.
that.
We've launched our buy now pay later slightly differently because we are
Yeah.
going after the 127 crore Indians who don't have a credit card.
To the
Uh,
tier two, tier three, tier four, those
Tier 2,
markets.
tier 3, tier 4, and tier 1 also. Yeah, tier 1, like not multi carded people like you and I. Like if you are using the buy now pay later to sort of
I don't want it.
expand the market and go beyond the 3 crore people you have a credit card, there is a business. Whether you call it a credit card or whether you call it a buy now, pay later. If you're going after the same 3 crore people, then you are basically saying, I have to take the customer who has a HDFC insignia and get him on my platform. He will have probably a fifth card with him, and then he will choose between the 5 cards depending on who's giving him the best offer. That's by design a loss-making business, right? Unless you go after the 127 crore people who want credit and who don't have credit, you are not building a business. You are basically using investor money to fund consumer discounts.
So let me ask you the last question. Could I manage to sustain your interest for the last 58 minutes?
No, absolutely. Great conversation.
Yeah.
Thanks for sort of being blunt and pointed in your questions.
Okay. Three rapid fire questions for you. A business philosophy that Suhail, Sameer, or BharatPe believes in. Quick answer.
It's very simple. I think you build great businesses on the back of a disruption, which is our original conversation on we got lucky on UPI. I think we got lucky on UPI, but we were there to sort of catch the trend. If you miss massive trends repeatedly, you can't build a sustainable business. So I think just being a bit more thoughtful of what trends could play us out and sort of have calculated bets on some of the ones which impact you is sort of our view of building a sustainable business, right? So catch the trends and sort of don't fight them is sort of the business philosophy I believe in, at least.
Okay, that's sort of well said. The most overhyped and the most overawed unicorn for you, what would that be? Two names.
Oh, that's a very bad question. I'm
What a
not
bad
going.
question. You're asking, you're telling my questions are bad. To give answers, the most overhyped unicorn and the most overawed unicorn, according to you. It's such a simple question. There are 41 unicorns. Choose two answers. No?
I think it's Paytm to me.
Okay. Okay. So it's a love and hate sort of relationship. Uh, okay. My last question to you. If one were to start a fintech company in 2022, is there anything left to start? Is there a vacant space? Your advice to startup founders? Or you think all the spaces are taken? If I were to put you in a reverse pitch spot here, what would that really be?
So I think there are lots of opportunities. Lending is such a big business that like there is still massive opportunity either in individual segments or overall. Because if it was it was a sort of a oversupply market, we will not have so many banks existing. We will not have so many NBFCs existing, right? So I think there is definitely value to be created in alternate lending still, and many more models will come, and which may be great. And the second thing I really actually find exciting is can how can we use the power of the fintech to enable customer acquisition for smaller businesses. Whether you call it a fintech business or you call it a SaaS business, I don't know. But if you look at loyalty in India, it is typically geared towards large partners only, right? Uh, get ICICI to give people points, get them redeemed at HPCL or Future Group, right? That's not really loyalty, and that's not helping anyone except for the sort of the large businesses. Can we take the payment architecture and the payment flows to drive customer acquisition for small shopkeepers and sort of have micro targeting on consumers? Whether you make money from a consumer or you make money from a merchant, whether it's sort of a per transaction money or whether it's a SaaS type income, all that to be figured. But I think it's the small shopkeeper pays you if you give him capital to so that he can grow working capital and sort of add a store, etc. Or gives you money if you send him a consumer because they find it very difficult to attract consumers, right? So there is a massive
Hmm.
opportunity on the second side which no one has gone after. By the time someone launches it, we may have already launched it. It's sort of one of the things we are thinking about, but I think there is massive potential on that side as well.
And thank you so much for your time and energy to this. Let's say
Thank you.
goodbye and
Take
good
care.
luck.